Yo, what is going on, guys? Welcome back to day 20 of the mentorship. Today, we are going to be going over the relationship between news events and market structure in general. So, if you haven't watched the last 19 videos, I highly recommend to go back and watch those because, it just makes the most sense. Go watch those videos, get a good understanding of what I am teaching and all that good stuff. So, make sure to leave a like and subscribe to the channel. Leave a comment down below if you deem necessary. So, without wasting any more time, let's just get straight into this video. So, I want to start you guys off with basically what news is and how different folders, right, whether it's red or orange, really the only two that we're going to be talking about are red and orange, but how these really affect the market and how you can, for one, avoid losing a lot of money, blowing an account, and two, really just also using this to your advantage to, potentially even get in a trade before news happens because, as I'll explain later on, news is very important, and a lot of people might say news is gambling, but in reality, it's not. If you understand where the direction of the drawn liquidity is, there are times where you can enter a trade before the news even comes out, and you will be fine. But there are different news events that affect the market in different ways, so that's what I'm going to explain right now. All the different news events, how they affect price action, all that good stuff. So we're going to start off here with PMI, okay? So PMI is usually a mid-tier type news event. There isn't much that happens for PMI. It might be like, a 30, 40, maybe 50 point candle at some times, but PMI I don't usually care too much about because like I said, it doesn't have too much of an effect on the market. I'm just going to explain what news events are, how to avoid them in terms of trading, how to, utilize them, take advantage of them, all that good stuff. So, like I said, there's PMI. It's usually not too crazy. Doesn't really do much in terms of movement. Okay, if you look over on the right here, also this website is called Forex Factory. I would highly recommend putting this, bookmarking it on your Chrome or whatever search engine you're using, and open this every day to see if there's news because it can affect the market, okay? But over here to the right, you see we have actual, forecast, and previous, okay? So before the news even drops, right, there is a countdown on it and it shows you in live time. So before the news drops, it's going to show you the forecast, okay? So this specific day at 9:45, the forecast for this specific PMI was 49.4, and it actually came out a little bit less. So what does this mean, okay? If you click this little folder right here, it basically shows you everything about what this means and how you can use it, I guess. So all this measures is the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. Whatever the hell that means. I don't really care. I'm here to just trade the chart and make money. You don't need to be like that hedge fund guy who has like 16 monitors lined up and you have this, and this. Like, dude, like you're just trying too hard at that point, bro. Like, just stick to one strategy. You can trade on a freaking MacBook Air, bro. You can trade on a Chromebook if you really want to. You don't need all that crazy shit. So ideally, the only thing you really need to be looking for is this right here, the usual effect, okay? So actual greater than forecast is good for currency. So if the actual data that it gives you is greater than the forecast, then that means it is good for the currency. Good for the dollar, but it's bad for whatever indices you're trading. So you could expect this specific candle to potentially be bearish. And I'm not saying you could use this to gamble because you're not going to know if the news is going to be bullish or bearish. You can know based off of price action, but if you're just dependent on news, by the time it drops, it's going to be too late. You can't even enter the position anymore because the candle already printed. So we can go back on this specific day, Monday, December 16th, and I will show you exactly what I am talking about. All right, so this news dropped at 9:45 a.m. So let's go right here. This is the actual timing. So this is the actual news event. So 9:45 is right here. So you can see this specific day, the 16th at 9:45, we didn't do anything. This green candle was the PMI candle. So like I said, it's very low. It has very low impact on what the market's going to do. But obviously, like I said, so since this was less than the forecast, right, it is bad for currency, which means it is good for the NASDAQ, which we did get a bullish candle out of. And then guess what? The news was bullish for the rest of the day, or the price action at least, okay? So that's how you can do it. You can do this with any red folder. It really doesn't matter. It doesn't work like all the time, but it has a pretty high win rate, I guess. As it says here, it's the usual effect, not unusual effect. So that will happen. You can use that to your advantage. I don't really do that much at all, but it's there for you guys in case you do want to do that. So the next one that we're going to look at right here is core retail sales, or just retail sales, whatever. You might see this. This happens maybe a few times a month. This same thing applies here. Not going to go over that again, but yeah, same thing there. This, let's see if this does any effect on the market. I'm not even really sure for myself, to be honest. So let's see. That is December 17th at 8:30 in the morning. Boom. We didn't do anything. Literally just a normal size candle. But if you go back to the news event, let's see what it did. So 8:30, okay, so less than the actual forecast. So it's not greater than, so it is bad for the currency and good for the NASDAQ. So, and you'll see that we had, a choppy day. We didn't really do much. We accumulated here, sold off, accumulated, sold off. I'm sure there was a couple trades you could have taken in here, but there was no general trend or direction for the day. So that's exactly what I mean by it's not going to do the same thing every single day. So yeah. Next one on here is FOMC. Now FOMC is very important. Most of the time FOMC will make some pretty hefty moves. If we go to December 18th, I'll show you exactly what I mean by that. So here is December 18th, and you can see the time is actually at 2 p.m. So if we go to 2 p.m., you'll see here, look at this. 2 p.m., this is the 2 p.m. candle, and you'll see that this actually does inject quite a bit of volatility into the market, which you guys need to be careful of. Now, another thing you always have to keep in mind, on FOMC days, usually in the morning, you're not going to have too much volume. It's going to usually accumulate all the orders, do whatever it needs to do, and then for FOMC, that's when the big move is going to happen. So you can see even after 2, that's when the volume actually came in. So it's like a reverse New York session. Usually PM is, quite low volume, not too many moves happen within PM. You're able to catch a few scalps here and there, but the AM session is usually quite volatile. So it's the complete opposite in this scenario. So on FOMC days, I don't usually recommend trading in the AM, but there are still some good setups that you can find. If you want that more volatile type action, then sure, you can wait a few hours until PM for that you can wait a few hours for that FOMC move to catch some decent size volume for that. But for the most part, I would just, at least for me, I like being in and out for the day. I don't want to be in the chart for more than like 2.5, 3 hours. So I'll just take my trade in the morning. If I don't get something by like 12 o'clock Eastern time, I'm done. I'm not looking to trade in the PM or anything like that, okay? So that's pretty much that one. Okay, if we go over here, we got unemployment claims. Unemployment claims is kind of like the same idea as this one right here, the core retails. It doesn't move too much, but it can, depending on just overall structure and where the drawn liquidity is relative to that specific news event. So we could look here, December 19th at 8:30. Let's go ahead and look at that. December 19th at 8:30. So you could see here at 8:30, again, one candle, didn't do anything. Very small, not much effect on the market at all, okay? And then, of course, we had somewhat of a pretty choppy day. I'm sure there were some setups in here, of course, but again, the ones that I just told you besides FOMC don't really move the market that much at all, so you don't have to worry about it. You can trade when it happens for the most part, but yeah. So we got those 3 down, okay? Core PCE price index is the same thing as this one, doesn't really do much. Same thing as final GDP, it's all the same, does not do much at all, okay? Another unemployment claims, like I said, doesn't do anything. So let's look over here. Now PMI, we already went over PMI. Where's our next one? Okay, NFP. I think we got a couple more. So NFP. Okay, NFP is quite a big event. Okay, NFP has some pretty large moves. Again, you can use this to frame a bias if you really want to for the rest of the day, not for the actual news candle. NFP tends to be one of the most volatile type scenarios in relation to news. And I'll show you this and exactly what I mean by this. So if we go to January 8th. So if you look here, I accidentally said Wednesday. They don't have it on Wednesday. It's usually a Friday. So January 10th at 8:30 in the morning. So let's go ahead and take a look at that. As you can see here at 8:30, this was the news or the NFP. Sometimes it'll leave a small wick, other times it'll go crazy and leave a huge wick, come back down, rebalance, and then leave a huge wick with just a little body. It really just depends. Again, it all aligns with price. If you can understand what price is doing, where the draw is, you can catch these moves. You can enter here, put your stop, somewhere over here, and expect this candle to not take that high. It all depends on price, like I said. So that's pretty much FOMC. I mean, you could see for the rest of the day, it'll hit a draw. If the draw is already hit, it might chop around for the rest of the day, which I think this is one of those days. Yeah, I don't even want to continue to play price. But yeah, that's NFP. I think that's almost all of them. And then there's CPI too as well, right here. Where is it? CPI. So CPI is the same exact idea as FOMC and NFP, around the same volatility. So CPI, we'll go ahead and look at that one, January 15th. Now, if you look here, CPI actually is, now that I think about it, probably one of the most volatile compared to FOMC and NFP, just because of, just me seeing it over and over again. It does stand for Core Price Index. If you look here, it basically says the change in price of goods and services purchased by consumers, excluding food and energy. So this is one of the ones that has a very big move. A lot of liquidity is injected into the market. Just this one candle in a singular minute, price moved 183 points. Meaning if you were to go in with one mini contract, which is equivalent to $20 per point, you could do the math on that. It's quite a lot of money, but of course, CPI can do whatever it wants, bro. This is one of these days where it barely creates a bottom wick and just shoots up. Definitely a great day to gamble some funded accounts on Apex if you are willing to do that. But there are days where it can do legitimately something like this, bro. It can do something like that. And, if you're long here, you get stopped out and then it goes in your direction. If you're short, you might get the first little bit of it and then slippage will kind of mess you up. Even if you do try to get out, you might get filled over here. It's just a mess. I wouldn't advise trading it unless you're getting it earlier in the pre-market and you kind of expect not a huge deep retrace to stop you out or anything crazy like that. So in a way, it sort of is a gamble, but it really just depends on market structure and overall just everything along those lines. So there's really not much else in terms of news that I could tell you guys. There's red folder and orange folder, which is really all I look for. You could look here, there's yellow and this folder, which is usually like bank holidays, stuff like that. All I can think about is bank holidays. But yeah, red and orange is really the only ones you want to be looking for. All this video is just about is to inform you guys on what these news events are, how to kind of trade your way around them or trade them if you want to. But yeah, I just want to give you guys a little bit of an education on just news in relation to the dollar and the overall, New York Stock Exchange and their markets. So yeah, I'll leave you boys with that. I don't really think there's anything else to talk about in terms of news. But yeah, if you guys enjoyed, make sure to leave a like on the video, subscribe to the channel, leave a comment down below if there's anything you're confused about. I'm willing to answer you 100%. I read all my DMs. I read all the comments, so go ahead and do that if you are missing something or if you are confused. But yes, I will leave you boys with that. No trades today. I will see you boys tomorrow for Tuesday. I don't think there is any news today or tomorrow. Let's see. Yeah, no news tomorrow. No news Wednesday. And we have unemployment on Thursday, and then we have PMI on Friday. So might be a weird next 2 days for Tuesday and Wednesday, but we'll see how it all plays out. But without further ado, I will catch you guys tomorrow for potential trading and also day 21 of the mentorship. Peace.